Hi everyone and welcome to our weekly video. The trading week may have been determined by the US non-farm payrolls report last week and the sharp rise in US Treasury yields, but some key fundamental events are taking place this week, which may also trigger volatility in financial markets. Now we're looking at three key events for financial markets this week. First up is a plethora of Chinese data for September. This includes the service sector PMI and most importantly, trade data due on Friday. The market will be watching closely to see if China's export volumes have been hit by US trade tariffs on Chinese goods. If we see a sharp drop in exports, then it'll be worth watching the Chinese authorities' reaction. Will they slap retaliatory tariffs on more US goods? Could this lead to a further escalation in the US-China trade war? If it does, then it could hurt risk sentiment and knock global stock markets. Next, we'll be looking at the UK's industrial and manufacturing production, scheduled for release on Wednesday, the 10th of October. Now that the Conservative Party conference is out of the way, political risk for the pound should ease off until 18th of October, when we get the next EU Brexit summit. Production data for the UK will be watched closely to see if Brexit uncertainty is hitting production and having a real impact on the economy. We know a lot of firms are concerned about Brexit and the impact on customs barriers with the EU, particularly the car sector. If this fear is already leading companies to scale back on production, then we would expect the pound to fall sharply, with the return to sub 130 versus the US dollar. The pound may also fall against the euro and against some safe havens like the yen and the Swiss franc. Lastly, we'll be watching the ECB meeting scheduled for Thursday, October the 11th. The market will be watching to see if the ECB has anything to say about Italy's budget, the sharp rise in Italian bond yields, and the flaunting of EU budgetary rules by Rome. Also, will the ECB mention anything about Italian and Greek banks which came under heavy selling pressure in European stock markets last week? If they sound concerned about banks, but reiterate that the ECB won't bail them out, then we could see further selling of European equity indices, which are heavily exposed to the financial sector. Regarding ECB monetary policy decisions, the recent disappointments in European economic data, combined with the political and the bank fears, means that we believe that the ECB will hold steady and not say anything about following the Fed and tightening policy in the coming months. Overall, we think that the bias is to the downside for the euro on the back of this meeting. So that's it from us, guys. Good luck trading this week, and we hope to speak to you soon.